So you're a first-time buyer in Ireland and you're about to buy or build your first home. Hi, my name is Pascal and I'm a financial advisor in Donegal, and I've been advising people for well over 30 years on their finances. Days it feels every day of it, but today's not one of them. So today we're going to look at first-time buyers. We're going to give you 5 areas of considerations, shall we call them. So it's 5 things that you should look out for, especially for first-time buyers or first-time builders. And the first one is how much that you can actually borrow. And central bank guidelines and lenders will tell you 4 times income is what you can borrow, but that's not the full picture. And a number of things can actually change in that. One of them is that banks can actually go outside 4 times income for a percentage of their lending book. And they can lend up to 4.5 times income, and that can make a huge difference. Considering a couple on 80 grand, 4 times income versus 4.5 times income can allow you to buy a more expensive house. So understanding what you can borrow is hugely important. Now, there are a number of other calculations that each lender runs that you must consider as well, and one of them is net disposable income calculations, repayment capacity calculations. So whilst lenders tell you 4 times income, it's not always just a straight line to that calculation, so advice is needed. One of the other things to be very careful of as well when it comes to how much you can borrow is actually how much you can pay back, because just because you can borrow X amount of euros doesn't mean that you should. So what I would say is make sure that whatever the figure is, make sure that you can actually pay it back. Banks will use a stressed interest rate to give you what they are looking for, and they're looking for affordability calculation over 6 months prior to you actually making your application. Make sure you hit that number, but it'll also make you understand what it feels like to pay a mortgage. Now, you're probably paying rent anyway. So I mean, if you're paying rent and saving money, you already know how that feels, but just because you can doesn't mean you should. So make sure that you can afford it and that you can afford to pay your mortgage for a sustained period of time, even when time gets tough, because your mortgage payment doesn't go away. The important thing there is to seek advice. Always speak to more than one bank, and the right advice, but I'm slightly biased on this one, and let me speak with a mortgage broker. One that can actually take you through different lenders, their lending criteria. Variable incomes can be treated differently within lenders, so make sure and take advice on this. Commissions, overtime, shift allowance can all be treated differently with the different lenders. So seek advice. So the second consideration I would say you need to look at is the costs that nobody talks about. Lenders will talk to you about the 10% deposit first-time buyers need, and you do need a deposit. So if you're buying a house at 35,000, you need 35 grand of a deposit. But you also need to be able to cover the legal costs. You also need to be able to cover stamp duty. You also need to be able to cover the valuation fee for the valuer. And if you're buying a second-hand property, we would also recommend that you need a structural survey. The valuer for the bank just gives a value, a market value of the property. It doesn't give you any sort of a guarantee as to whether there are any problems with the house, any issues, any rise in damp, any structural, any dry rot. That's where a structural survey comes in, especially under a second-hand house. So it is a cost that a lot of people don't factor in. Also, if you're moving from one part of the country to another, there is also moving costs, and all of this needs to be funded. So make sure that you have your math right, and a good mortgage broker will be able to help you do that as well. And what I would suggest is add another 10 grand in on top of your deposit, and that's a good target and gives you good scope and a little bit of wriggle room to cover all the other costs. So deposit isn't the only other cost. The third consideration are what supports are available to you as first-time buyer or first-time builder. And generally there are 2, the Help to Buy scheme and the First Home scheme. So if we deal with the Help to Buy scheme, first of all, it has to be a new house. In fact, both of these has to be a new house for the most part, but the Help to Buy scheme has to be a brand new house out of the wrapper, cannot be a pre-loved home. And the max that you can get is 30,000 or 10% of the build cost or the taxes that you've paid over 4 years. Whichever of those 3 calculations is the least, that's your number. So let's walk an example. You're buying a house at 300,000, 10% of that's 30,000, which is the max that you can claim. But the tax that you've paid over the last 4 years is only 22,000. well, now you're getting 22,000, not 30. And if the reverse is the same, that you're buying a house at 250, well, 10% of that's 25,000. But if you calculate your taxes as being 32, well, you're still only getting the 25, which is 10% of the value of the house. So 3 calculations, whichever is the least is what you get. And it is a tax back. Even if you've only 2 years to claim back, because we would have a lot of people moving back to the country and maybe only moved back 2 years ago, you can still claim the 2 years that you're here. The other is the first home scheme, and this is, for the most part, a co-ownership deal that bridges the gap between what your mortgage is, your deposit, your available funds, and the purchase price of the house. And it can be in conjunction with the first home scheme. Both can run together, but calculations need to be run, and understanding is hugely important. And this is where a good mortgage advisor will be able to take you through both of those schemes, check your eligibility, and see where the overall math works. But there are supports, and it is important to understand exactly what they are and how best you can use them. The other consideration is whether you should go fixed or variable. And I would say at the start of your conversation, this isn't overly important, and I would say get yourself approved first, and then anything that you can want to do to change before you go loan offer is where you have a conversation about fixed or variables. Interest rates in Ireland are ranging anywhere between 3 and 6%. So if you're buying a new house, chances are the energy rating is better than a B3, and you're looking at an interest rate of 3% on a fixed rate mortgage. And I would more than 90% recommend first time buyers to choose a fixed rate, because generally, one, they're cheaper than the variables, and for the first 3 or 4 years or 5 years, it gives you an opportunity to settle in. And what's the difference in a fixed and a variable? Kind of what it says on the tin. So a fixed is exactly that. Your rate is set for that number of years. A variable rate is where the bank or the institution that you've borrowed money from can increase the rate or decrease the rate, but they're more inclined to increase when they get the opportunity than decrease when they should. So central bank, if interest rates go up in the central bank, then generally a variable rate with a bank will go up as well. Fixed rates is exactly what it says on the tin. If you have a 5-year fixed at a certain rate, then you have a 5-year fixed at a certain rate. Your default position after your fixed will be your variable. Bank will write out to you after they're fixed and offer you whatever products they've got. At that stage, you can make that decision. But I wouldn't get too hung up on fixed or variables at the start. Get yourself approved, find your house, agree a house, and then settle in on what you actually want in terms of fixed or variables. Again, good advisor will take you through all lenders, see who's offering what. Careful one on this one is the cashback offers with the banks aren't available on some of the cheaper rates. So whilst it is a support that lenders sometimes advertise, it's not available if you're taking some of the green rates at 3%. So rate matters, but not on the initial conversation. The fifth consideration is probably a very Donegal centric consideration, and that is obviously defective block. And the reason I say it's Donegal, because Donegal by far has been the most affected county. Obviously Sligo, Mayo, these counties are affected as well, but Donegal for the most part is mostly affected by this. And when somebody is buying a second-hand house, our advice would always be get a defective block test. Anybody selling a house should already have it, and the estate agents, whilst they don't have to ask for it, most of them are actually insisting on having a defective block test, mica test, on the property prior to them putting it on the market, and you need this. So whether you feel you do or whether you don't, I would insist that you should have a mica test. Now obviously, the results of this test has implications on whether a mortgage is possible or not. And this is where advice needs to be had and sought. It does have a bearing. And lenders have issues with mica levels, even though we all know at this stage that mica is never the problem. But as it stands at the minute, it is still the reading that the lenders are taking into consideration as to whether or not the property is mortgageable or not. So I would advise getting a mica test, seeking then whether lending is possible or not, and a good mortgage broker will be able to help you with this one as well in terms of whether a mortgage is possible on the property or not. So guys, for first time buyers and builders, there's a lot of considerations. There's lots of moving parts, and there's generally a good number of people helping build your jigsaw. So my advice is get around a good mortgage broker, get a good solicitor, Get a good surveyor. If you're buying a new house, you don't need a second hand or you don't need a structural survey, but certainly get a good team around you. It does make the mortgage journey a lot better, a lot easier when you can pick up the phone and speak to somebody when you've got an issue, a consideration, or someone that you just don't understand. So when it comes to mortgages for first-time buyers or first-time builders, obviously, I'm going to say speak with a good mortgage broker.